starting with the dollar yen, that's the chart in front of us right now, the US dollar, Japanese yen. I hate this currency pair. In 2003, I lost $50,000, and I'm rounding that off. It was like $55,000 on this currency pair. I lost a lot of money trading this currency pair in one day on intervention. It was my first major experience getting pillaged by the Ministry of Finance in Japan. So I have had a long-standing grudge against this currency pair, but I'm giving up on that. This is the year of forgiveness between me and the dollar yen. When I traded that trade on the dollar yen in 2003, it was actually a trend trade, and I still got smacked on a spike. Sometimes on intervention, it can spike in both directions. It was terrible. Terrible experience. But now I'm moving on. It's time to move on. And I would like to look at the dollar yen, which has risen considerably over the course of this year. This is a daily chart on the US dollar Japanese yen. I'll take you through everything that I'm looking at. The number 2 that you see on my chart in 3 separate places represents a purple trade. A purple trade is a mix of the stochastic oscillator and the RSI. What the purple trade number 2 says is the market has reached an extraordinarily overbought position. And if it falls below the lows made when that overbought position happens, we can sell it. And if it rises above the highs of those candles, we can buy it with the trend. So we have had some extraordinary type 2 trades. All of them buys because we didn't reverse on these trades. All of them buy signals. However, when you get 3 type 2 trades in a row, it is an early warning sign that the market is ready to reverse. I am really, really close to wanting to sell the US dollar Japanese yen. Let's drop down to a 1-hour US dollar Japanese yen chart. And I want to show you this trade type number 2, which appeared last week. Well, I don't know if it appeared last week. Whatever. It appeared on February 3rd at 1 a.m. GMT. So it appeared this week. As soon as the market dips below this red line here, that triggers and turns on the trade type number 2. That would be at 92.45. And it's an opportunity to trade down to 90.30, 90.50 in that area, a retest of this black trend line converging with previous resistance and support on this daily chart. So the first opportunity of 2013 is a counter trend opportunity. If you don't like that, I'm going to give you a trend trade right after this. But that's the first one. That's a trade type 2. That's a purple trade. I teach the purple trade at tfl365.com as part of the course that I do there. It's a monthly subscription. You can do a free trial and learn about the purple trade today. Just go to tfl365.com. This is not a commercial, but I know you're going to have a question about it later. At the bottom of my screen, you see the Walton Strength Index. Wes Walton has worked with me for 13 years, and he is the creator of a strength index that measures the relative strength of currencies against each other. And the US dollar Japanese yen has sort of peaked out at a high recently and is ready for a bit of a reversal here. So all of those things together give me a sell trade at 92.40 with a target between 91.50 and 90.30, and that's the counter trend trade. Now, as for a trend trade, you could just say, I don't want a part of that at all. I don't want to do that, Rob. I don't want to be a counter trend trader. I want to be a trend trader. In that case, you could wait until we fall to 90.30, which is a retracement inside of this upward trend, and then you could buy the ever-loving crap out of it. However, I don't think that's a good enough price on this pair. I think I'd want to get all the way to 90. I would prefer to get all the way to the round number 90, or even all the way down to, drum roll please, 89.50. I would love to buy this currency pair at 89.50 with a very tight stop. I'm talking a stop loss in the 89, like a 50 pip stop, and then a 100 to 200 pip profit target. I think the first opportunity of the year, once again, is to sell the dollar yen at 92.40 or to buy it at 89.50. I like those trades. I'm going to take those trades live. I'm going to definitely participate in that movement. The next one I want to look at for 2013 is the euro dollar. This is the daily chart. No trade types number 2 recently. Just an upward incline that seems like it may never stop. This is uninteresting to me right now as a buy trade. Let me tell you why. Both the euro and the dollar right now are strong. Remember just a moment ago you saw the US dollar, Japanese yen rising? That's dollar strength. Look at the euro. The euro's rising. So the euro and the dollar have both been rising against the yen. That means the euro dollar doesn't have as much potential. Actually, the euro and the dollar are both strong against the yen, which is the bellwether currency for good times and bad. And so, look, this is not a trade opportunity here. This is not an optimal trade opportunity for us on a buy. Definitely not. If anything at all, there are signs that the dollar is strengthening against the euro. You can see it creeping into positive territory right here on the chart. So let's take a look at a euro-dollar 1-hour chart and get a little bit more specific. I'll show you how a trade type number 2 works, and you can see it in action. On Friday at the non-farm payroll report, we had a purple trade number 2 come out before the non-farm payroll report was released. We didn't take it because it was right in the face of the non-farm payroll report. Then we had the violent, stupid reaction from the NFP, and then we dropped down below the low of the candle that created the purple trade. And that number is approximately 36.30. That gave us a sell at 1.3630. And now we're on the way down to support at 35.41. We're almost there right now. This is exactly the kind of thing that we're looking to do on the dollar yen, which I just showed you a moment ago. This is exactly the same thing we want to do on the dollar yen. We saw the trade type number 2. We draw a horizontal line to protect ourselves if it falls through it, and to show us where the market is ready for a sell trade.